Today we're going to talk about day trading futures, my strategies, what assets I trade, where I trade, the combine I trade on, all of those details right inside here. I took some screenshots of some actual trades I took over the last 2 days. We'll break them down exactly so you know exactly what I'm doing moving forward as we talk about futures content in the near future. So first and foremost, guys, I trade on a prop firm called TopStep. I've tried a couple different prop firms out. TopStep seems to be the one that I like the most. As I was learning how to trade, it was always nice having that fixed amount that I was going to lose or essentially pay to do the combine every single month, as opposed to just blowing up account after account after account. And also the tight rules that everybody hates actually made me a much better trader. So I just stuck with them as I learned how to trade. And that's currently what I'm trading with right now, is the TopStep prop firm. I'll leave that link down in the description if you want to check them out. If you're trading futures, I'm sure you heard of them before. That's just the one that I like to use. And they just did a special for Veterans Day where it was like $11 for a $50,000 combine. I was like, all right, I'll open up another one. And that's what I'm going to be showing you. I just started it on Monday, and I'll show you that journey of that combine. So we're not just jumping into one that I've already done and already funded, things like that. We'll just start nice and fresh, and then I'll give you updates and show you until I pass this combine. Okay, so this is going to be the first trade I took yesterday. The platform that I'm using right now is Tradevate. Now, Tradevate a couple months ago, they fell to shit. If I'm being honest, they just got crappy. There was a lot of glitches as they were bought by NinjaTrader, but things seem to have been smoothed out. And as a Mac user, I tried MotiveWave, but this seemed to be the one that I liked the most. I was most comfortable with their charting and things like that. TopStep did just make their own platform, TopStep X, that I am on the waiting list for. So once I get that, I'll probably go over to there. It looks a little bit more like TradingView, which I use for a secondary chart. But right now, I'm using Tradevate. The assets that I'm trading, this is the ES over here. I am trading currently on the 5-minute chart. I use the 5 and the 15. Right here is crude oil, and right here is the NASDAQ. Those are the only 3 assets that I really look at. Primarily on my chart every single day, I just have the ES and the NQ up. Every once in a while, I'll look at crude and I'll see if anything like tickles my fancy, or if they have a really good setup. From what I've seen with crude oil is it seems to like follow more of like standard trends of supply, demand, things like that. So sometimes when the market is a little choppy, I can go over to crude oil and it's a little bit cleaner. What you're looking at my chart as far as indicators, guys, I have VWAP on here. And then over here, this is volume. Now this is volume per price. I don't have volume per candle down here. I just have volume per price. I am looking at price action on Bookmap. If you don't know what Bookmap is, I made a video about it. It's that thing that you might have seen with the big bubbles everywhere. That's what I'm using for pretty much my candle volume. And I'm using that as like secondary confirmation for entry, looking at time and sales, like how strong is a buy move, how many buyers are there, how many sellers are there, etc. So I don't have that on my chart. I did start trading with tons of charts, guys, EMAs and MACDs and deltas and all of this stuff. And what I found was it was just creating more noise. And as I started trading more, I got more successful the less indicators I used. So this, frankly, what you're seeing right now, this is what my screen looks like when I am trading. So we have a couple of things that are on the bar. Now, I've talked about supply and demand. Carmine Rosado, he made like supply and demand famous, and he does an amazing job. And you have others like Vincent, he does the break and retest. Guys, everyone has their own little method and their own madness. And what I also found out was I couldn't try and trade like Carmine. I couldn't try and trade like Vincent. I had to use their teachings, but then you have to come up with your own particular style. And this one right here, I'm using fair value gaps, okay? And you'll see them as F value gaps. This was really famous by ICT. He talks about that. But what I found was that fair value gaps pretty much tightened up supply and demand zones for me. They were just a little bit more reliable, and they just worked better for me. So you really have to use what works best for you. And right now, a fair value gap is what works best for me. I think if you're on like TradingView, you can like download the indicators and they'll go right on your chart for you. But essentially what a fair value gap is it's built with 3 candles. So we have the bottom of the wick on this candle, the top of the wick on this candle, and then that gap between the 2. Another example here, we have this and we have this. And then over here, here's that gap right here. So when I get on in the morning, I'm looking at basic news, but essentially what I'm doing is I'm drawing fair value gaps on the 5-minute time frame and also on the 15-minute time frame. I like to draw my fair value gaps in the time frames at which I trade, number one. And two, how do I figure out what I trade on? Well, I tend to trade on the 5 minutes because that tends to be the average amount of time that I'm in a trade. So that's kind of where I jumped between the three. I tried tick charts. I tried all of these things. And then I looked and was like, okay, my average trade is 5 minutes or so. That's what I'm going to use as my chart. And that has just worked best for me. Okay. And that's, like I said, it's all about what works best for you. Now, these two trades that I took here, I'm going to show you, these are examples of, I wanted to show you losses as well. I'm not one of those guys that's just going to like show you wins. Okay. So what I'm essentially looking for is I'm looking for a fair value gap to be created. I'm looking for a close of a candle in the fair value gap. Then I'm looking for an exit back out of that gap with my stop being at the top of the fair value gap and really my exit being either in confluence with some sort of volume or a gap down below. You can see there's a fair value gap down below. That's not in this screenshot, okay? So essentially what happened here, I had this fair value gap that was created. It came up into here, okay? Then what happened was I saw it approach back in and we got a rejection again. What I did not do is I didn't wait for the close, all right? I always want to wait for a close inside that fair value gap before waiting for the exit. So you can see I enter here on the exit out of the fair value gap and it came all the way down, but then swept all the way back up. And I was like, oh man. So I would have had my stop right here at the top. It pretty much came up and it bounced off VWAP. I kind of moved my stop one point. I'm like, let's see if it goes above VWAP. It did not go above VWAP. It came back down, right? And as it retraced down, it came. And then pretty much I saw a lot of buyers coming through, the sellers on the tape, and I was like, I didn't wait for that close. And this was an example of me just getting out. And this was pretty much essentially after commissions, a break-even trade for me. All right, it was 9:30 in the morning. I was excited, right? I like to also try and wait. This fair value gap, I kind of should have waited a little bit longer. Now I kind of try and wait till like 9:45, 10 o'clock. The market continued to pull up, so that was a good idea, right? I saw those buyers coming through nice and strong. We consolidated around VWAP. We broke through VWAP a little bit, bounced off it again, and kept coming up, up, up. Now what we see here is I wanted to go short again. So now I waited for that close inside. And I was like, all right, I'm going to go short here because we did not break out and fill this gap. Once we fill this gap no longer becomes valid to me. So I got short with a stop right at the top of the gap again. It came down. This is 5 minutes, 10 minutes, 15 minutes. And then as soon as it climbed, it shot out. And this is where it triggered my stop. So this was a losing trade here. It's not going to work every time. But if you keep your stops good and you have a good target, in this case, I probably was going to try and target VWAP for a first one. I like to add to winners. So I might have added if we closed the candle down here, I might have added, took off at VWAP, and then tried it to run all the way down to this fair value gap down here. That was the thinking for that particular trade. Really down here, we had another fair value gap that was created right here. All right. But then that was invalidated once this broke through. So I just deleted it from my screen. That definitely got drawn in. There was no other ones that I could see real close. And then another one was created right here. So once again, I need to come out. I need to come back into that fair value gap. And the tighter it is, also too, you got to be a little bit nervous. I like one to be nice and thick, a couple points, depending on whether it's the ES or the NQ, right? But this is a nice tight one here. So I would have wanted to come in, close, and then as we came out, I'm going to enter on the way out with my stop here. And then once again, either targeting highs or next volume. So this is an example of using a fair value gap in this particular day. It didn't work out in my favor. I pretty much got a break even here, and this was a $100 loser. So I think I ended up being down $75 on the day. Okay, so this is going to be an example where I'm going to use volume, and I'm not necessarily going to use VWAP if VWAP isn't there. If you traded on Tuesday, you know that we had the CPI data and went up like, it just shot to the sky, and then it kind of just grinded. So we saw it grind, and then it kind of like slowed up here. We saw volume start to slow up here, and it pulled back, and this was kind of the pullback that I really liked, and I was like, let's see if this is going to continue down. We had the double bottom here. And then on this candle, what I was looking for is I was looking to see how we handled this volume right here. And that volume acted as pretty good support. And I was a little like, not, I was a little slow to enter, right? I was a little bit nervous. I let my emotions get in. When I saw this and then the third time bounce off that volume, I was like, all right, I think we're pretty good. Because generally we see this void here, okay? And I'm sure there's a really technical name for that. If you break through a certain amount of volume that's conducted at a certain price, it pretty much will cruise down through. And then these, I'm going to use these as my targets, these areas of high volume. So I knew that once we bounced off of here, we pretty much needed to break this level here, right? All this volume was about the same. So I entered at the top of this volume right here saying, all right, I probably should have entered down here when it bounced off again, but I'll enter here and I'm going to try and ride this gap into this volume right here. And this is going to be my target. And we can see, boom. Now, where was my stop? Essentially, my stop was probably down here. So this was a bad risk to reward, guys. I'm not a perfect trader. And I'm going to be honest. If I entered here, right, I did take a little bit of heat, but I did have my finger on the close trigger at the bottom of this candle. But truly, this trade would not have been invalid for me until we broke this and then came down behind here. This would have been a better stop, but that would have been a ton of heat, especially for the small amount of reward. And at this time, we were already up 2% on the day on the NQ. So it's like, I try not to short the top, but you didn't know if it was going to just continue to grind. So with no fair value gap and a little bit of a late entry, I said, okay, I'll take the $270 from 68.80 up to 81, a nice little 12-point move, and that's exactly what it did. It came through, it tried to bust through here, got rejected a little bit, came through, and once it fought through, it slid right through this zone, and I took my target right here at this volume. So that was the strategy there, not using fair value gap. This was the strategy of using volume. This is an example today using a fair value gap. Okay, once again on the 5-minute ES. This was today. So this is after we rounded out the top. We came through and we formed a fair value gap right here. Right, so there's the gap from candle to candle. This was on the 5-minute. And then we can see this bigger one was on the 15. Right, so it's pretty much once I got into the 15, I was going to start to watch. If it got into the 5 minutes, which narrowed it down, I was very, very happy with. Especially with the fact that there wasn't a lot of volume until down here. So I knew that if we rejected out, I had, once again, this volume void right here that I should be able to ride down into here. So that's essentially what happened. And I was a little bit more disciplined than I was on Monday. We came down, I waited for that. This is essentially Vincent's break and retest, right? So we came in, I was like, all right, let's be cool here. I got that close inside of my fair value gap that I wanted. Once it came up and it immediately it rejected out of this 5-minute fair value gap for me. It rejected it immediately, almost so fast where it hit here and then almost right back to here where I entered. I missed maybe a point or so. I got in, and then once I exited, right, once we exited the fair value gap, now I'm looking to start adding some winners. When I start adding to winners, though, I do like to keep my stops pretty tight. I'm not going to lie. So I was hoping to ride this slide. When I got out of here, right, I added to a winner, right, but I took my stop here. So it's like, this was my first trade, my first entry. This is my second entry, but this is my first exit here, right? So now I had another winner, and then I was going to add again. But as soon as I added to this contract, the volume from the sell side, it just died. And I started to see some strength from sellers. I wrote, volume slowed, don't be a dick for a tick. This is my initial target right here, okay? So I definitely wanted to come down here, but to go from 8 down to 7 for one more point, especially, like I said, when I saw volume died, and this is another thing, especially against a counter trend. At this time, we were still up 1.9 on the ES. So by shorting, I'm also going against the trend of the day, which I also don't love to do, but this was a pretty good setup for me. So once I saw that volume slow, I'm going against the trend. I didn't make my move, and I already got a pretty good play out of this. I was like, okay, I'm happy. Let's not stick around here towards the end of the day. I already had a profitable trade earlier in the day. Let's not stick around here and give back any profits. And it turned out later on in the day, this really was the bottom, and it came back up. It ended up flushing down later in the day, but if I would have tried to hold on to this, I would have lost all my gains back. So this is an example of how it's better than Monday, right? On Monday, I didn't wait for this close inside the fair value gap and then enter on the way out. So here's on the way out where I entered. I know I made that a clusterfuck, so let's start that again. Here we go. This is the end. I waited for this close, came into my fair value gap. I exited my fair value gap. That's where I entered. All right. Now, like I said, I could have held a little bit longer. I add to winners. I don't add to losers. So that's pretty much a strategy that I wanted to keep. Coming out of Tuesday, guys, here's the gross profit on the week, $295 up. I did a little bit of commissions, 4 winning trades, 1 losing trade. The difference was the break even. They considered this right here the break even trade. So that didn't really count as a trade. And that's where I'm at right now on Tuesday. And like I said, they don't have to be big, but as you see, once again, average winning trade, 5 minutes. That's why I trade on the 5-minute chart, longest trade. I'm not really a scalper. That just doesn't seem to be what works best for me. Longest trade time, 20 minutes. Average trade time, 7 minutes for the week, guys. I will keep you updated on this combine and also give you some other examples of things that I'm doing whenever I see setups. I only take 1 to 2 trades a day, so it's very easy for me to journal and document those trades, and I'll do so for you. If you have any questions about this, leave them down in the comments below. Give the video a like if you want more futures content, and I'll catch you guys on the next video.